Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como from Ireland, Como Lafoy. It's a very exciting day today, particularly for canola. So let's get right into what was happening in the markets today. Canola settled today at $697.40. That's $15.10 up on the day. It actually went up more so in the cash market. We'll talk about that in a second. Minneapolis wheat up 1.25 to 607. Kansas wheat up half a cent to 5.50 and 3/4. Chicago wheat up a cent to 5.44 and a half. Soybeans up 11 and 3/4 cents to 10.62. Corn up 4 and 3/4 to 4.84. And the Canadian dollar is relatively stable, right around 72 cents this morning. All right, let's get into the markets here today. All right, here's the big fish. July canola. Canola just slayed another resistance level after only 2 days worth of pullback or consolidation. Honestly, I thought we would see a couple more days out of that consolidative range, but here we are, potentially on the road to $710 futures, which is the July futures high from back at the end of May a year ago. Here, let me just put my little laser pointer over you. So this is the high that canola now has the ability to challenge. There isn't any real resistance from now until then, and that is around $710. In our last weekly report, we laid out the bullish fundamentals helping canola, but canola isn't making these new highs without a little help from some other markets. Before we get into that, though, I just want to say what's also interesting is that the May outperformed the July today, at least from a dollar per ton perspective, as well as a percentage perspective, and is getting closer to being even with the July contract. This could mean that commercial longs in the May contract are preparing to take delivery. In the futures market, if you are holding a long position and have the ability to take delivery of the physical, you can provide notice to the exchange that you intend to take physical delivery. That means that those holding the short positions in this futures month may be required to provide delivery. The business day before the first day of the delivery month, in this case, it would be May, is called First Notice Day. At least in canola, it's the first notice day. It's not like that for every single commodity, but it is for canola. Those who actually want physical canola and wish to take delivery can accept delivery. I'm trying to oversimplify this for the sake of brevity here, but a short holder ahead of the first notice day wants to offset their position so that they are not obligated to deliver unless they want to deliver. They have to buy back. If they don't want to deliver, they have to buy back the contracts. And sometimes this is hard to do in a bullish market, making the market even more bullish or to push even higher. So if by the end of April we see the May contract here trade higher than the July, I think this could be the reason why and would confirm this thesis if we start to see the May outperform the July in the next few days. Helper number one to the canola market today. Here's soybean oil. Soybean oil exploded today, gaining 3.6%. As a percentage, that was up more than canola, as canola was 2.2% up. We all know that canola oil is priced as a derivative of soybean oil, but the oil content in canola only makes up about 46% or so of crush output. So in theory, gains in the soybean oil should only be translated 50% to canola. But that is not what we are seeing here. If you factor in that soybean oil percentage into canola, it's still significantly outperforming soybean oil. So soybean oil was definitely a help, but canola is also running on fundamentals on its own, just in the futures market here. We want you to subscribe to our insights. We put out insights weekly, as well as more in-depth insights weekly. We put out daily updates as well as our ad hoc stuff to our clients if something interesting is happening in the market. So make sure that you subscribe. It's only $99 a month. That's Canadian dollars. You can cancel anytime. That's how we pay our bills around here. So subscribe to our insights. All right, let's move on to canola spot basis here. I did show this chart yesterday. So this is the exact same chart I showed yesterday. Again, this is an aggregated and average posted basis for canola, and it lags the actuals to some degree. It also doesn't account for those, like specials and things like that buyers often toss out through text or through their grain buyer networks, etc. But just to illustrate, so here's, where we were at to yesterday as far as those aggregated posted bids. If we were to adjust this for cash basis values today, particularly in that Yellowhead corridor where there's, we kind of call it Crush Plant Alley. This is what that basis level would have looked like today. We saw plus 12s, plus 13s in that region. So, this spot basis canola chart is understating what is actually being paid out there. We saw the basis rise today at one buyer by about $13 or $14 a ton. So if you factor in the fact that today we saw canola up $14 and or $15 on the futures, and we saw basis up $14, it's like $29, $30 in gains that canola saw just today in the cash market. So something very good to consider. Okay. Another positive input for canola here. Canadian dollar has been another helper. We saw a lower Canadian dollar yesterday that may have incentivized some of the buyers to up their bids a little bit. It also may have had a positive effect on the futures market. Canadian dollar, as a whole, the canola oil, canola meals, all priced on the export market in US dollars. A falling Canadian dollar makes those products produced in Canadian dollars more valuable, allowing futures and bids to rise to the farm gate. So in the canola market, lower Canadian dollar is better for pricing. Another interesting chart here. This is the July-November spread. Again, I sound like a broken record sharing this, but it took another big leap today. This widened considerably. It's now at about $30 a ton wide, which means that there is higher demand for the canola in the more nearby months than there is in the new crop month. Of course, this is somewhat normal, maybe not to this degree, but it does showcase, the widening of this spread showcases the disparity between the S&D picture perceived now versus the perceived S&D picture in July forward. So there is a premium being built into the front months. That is a real thing happening. And it again kind of strengthens the thesis around there being some physical short in the marketplace right now that is looking to be corrected with higher prices, incentivizing farmer selling. Okay. All right. Let's move on to wheat here now. So moving on to July Kansas City wheat. Also had an interesting day, kind of in an opposite way, though. In our morning comments, we talked about this market making a new low this morning. It was down pretty heavily. Today's action it did reverse itself to some degree. We still closed in the red, but I want to zoom in on this end of day candle here, or the last candle here. This is what we call a hammer candle. It kind of signals a potential bullish reversal. Now, one candle does not a market make here, but if we start to see a couple of days of positive movement after this, where the market, closes or trades significantly lower, but rallies back to kind of create this thing that looks like a hammer on the candlestick charts. If we see that followed up with a couple of days of positive market action, that may be actually a bit of a bullish signal in this market, or a signal that maybe the market has at least bottomed for the time being. This market has been weak, even given some declining supply situations globally. I think the world again has just not been paying attention to wheat, and some of the crop condition ratings have been dropping, but they're still above average. The weather situation in the hard red winter growing area has been improving. The weather situation in Russia has been improving. So there's just been a lot of pressure on this market, but now, one of these kinds of patterns may signal that those fundamentals have now kind of built themselves into the market, and we may be looking for a bit of a reversal here. Not prognosticating that at this point, but that's just something that we will be watching in the next couple of days if we can see some positive market movement here in wheat. If I translate that into the Minneapolis futures, they hadn't been making new lows, but they still had been declining in the last week or 10 days or so. Still very sideways pattern here, trouble breaking above the 200-day moving average. All those moving averages are still trending lower. So, overall, not a bullish market looking here, more what I would call neutral and near recent lows. So still can't call Minneapolis wheat bullish at this point, although there are some cash market things that are helping that out as well. All right, one last thing. Soybeans also saw some trade above resistance today. Soybeans settling at 1062, which is the highest uptrending day or upward moving day since February the 4th. That's this one over here. It also settled above the 200-day moving average. The 20-day moving, that's this yellow line, the 20-day moving average is also trending higher. And all this is happening while South American stocks are near their highest, right? We just saw Brazil kind of finishing up their harvest. Argentina's now inside of their harvest. Really, the cooling of trade tensions between China and the US is the big reason for this here. Although much of this is speculation that China will start to buy some US beans. They have not yet. They traditionally don't do so at this time of year because of the flush supplies in South America. But the weak US dollar has also been a positive impact on beans. So overall, beans are making some bullish moves here. We did see kind of a 200-day breakout fake, head fake here back in February or January. Um, we could be in for one of those. I don't know. But overall, today, this looks relatively positive. All right. Thanks for tuning in. Remember to subscribe to this YouTube channel. Leave us a comment if you have something to say about it. And please feel free to share it with your friends if you wish to do so. We will, this week will be an exciting, Friday will be an exciting end to the week. We'll see if we'll see a cooling of these hot end of week oil seeds markets or an extension of this trend. So we look forward to listening to you again, or we look forward to you tuning in again tomorrow. Have a great day.